volatile chop. So the reason I'm mentioning the Ichimoku cloud here and the volume weighted component of it is to say that even if we do get bid up above that pivot level, we still on a swing basis have more work to do to show that this market is stabilizing and that buyers are taking control. And if you think about it, it makes sense, right? If you're a position trader and you have inventory, and let's say that inventory is S&P futures, right? That's what your portfolio is made of right now. And your inventory is just sort of at the money. It's just like at the price you bought it. Then you're going to be a little more nervous about how the market trades, and your stops might be getting triggered in that sort of whipsaw trading. But if you're way above your buy-in price, and that in this chart would look like price being above the cloud, above in aggregate where people were buying, you're going to be a little more confident. You might be willing to add to your positions. You might be, seeing other people kind of climb aboard that momentum trade. And the same is true below the cloud. The shorts have the upper hand. Their shorts are in profit, so they're more likely to want to add to that positioning. Other momentum traders are likely to want to lean into that. And so when we're in this neutral state, we don't have really conviction on either side. And that's why when we're in the cloud, it's another area where I want to be just a little more cautious on size, where I place my stops, and how I put on my positions. So, as the market's below 51.45.50, I'm more tempted to want to fade it. And as it's above it, I'm more tempted to want to take breaks all the way to that top of that cloud area. And potentially, if we can get above there, 51.59.75. Below 51.45.50, we've got 51.33.75. That about lines up with 5100 SPX. That's a really important level. So if we get back down there, as is implied with this open, we're probably just going to chop around and kind of figure out if we're able to break away from that magnet level. If we can, to the downside, 5106 seems like a tempting downside target for like a full day 1% downside sell if we're getting that, right? But the first 20 minutes of trading are going to be pretty important to me to see if we get any kind of trend day out of that. I do like to look at the 20-minute opening range. I just caution that it may not work quite as well in the environment of negative gamma and being stuck in the cloud and trendless. The next chart we have here is the NASDAQ 100, and this is another one that has a very similar look. It is a kind of right below this pivot level, stuck in the cloud, has that same kind of look to me that it's still got some work to do to convince the broader market that buyers are trying to step back in and take control. So my pivot on the NASDAQ is 17,910. So that's an area that, we're trading below right now. If we are to push above it, I'd be targeting 18,079.50 for upside. And if we continue to trade below this, past that first 20 minutes of trading, particularly if we get a breakdown on the 20-minute opening range, I'm looking at 17,840.50 and 17,676, as downside levels to target. So pretty clear cut, again, based on the volume profile, the price action, but we're also in the cloud, which means conviction is not as high because neither party on a longer time frame is really in control. Then we've got everyone's favorite index to hate or love, depending on your conviction, but the Russell is also a favorite short product of hedge funds. It's highly interest rate sensitive. It's got about 40% of its components that don't make any money, so they're more at the mercy of prevailing rates. And on the other side of it, you've got about, 10-15% in the regionals, maybe more, and they're pretty sensitive to long end rates given the composition of their loan books in duration, products like mortgage-backed securities, 10 years, etc. So in essence, the Russell tends to move inverse of the 10-year note yield right now. It's become more sensitive, so it's going to be really all about this week, how do yields get impacted, particularly by the Fed and maybe the specifics of the QRA, where that issuance is going to happen on the yield curve. But for now, the Russell is below my daily pivot. That daily pivot in the Russell front month futures contract for June is 2026.70. And we've got support just below at 2019.60, and then 2006.30. Above that, I'd be looking at 2043.80 and 2076.70. But personally, I'm not really trading the Russell too much because this is one that's having a lot of sort of volatility that extends even the vol that we're seeing in some of the other indices. So I'm really more inclined to want to take trades in the NASDAQ and the S&P until I get a better sense as to what's happening with rates. I think rates are set to move higher, but this is a week that's going to be really consequential for that, depending on what we hear from the Fed. So let's talk about some of the things. I know the market's opening, so we'll get through these and then we'll go right into Bookmap. Here's crude. This is going to have a big impact on rates overall. The price of crude is pretty much the same. It tracks very well. There's a strong positive correlation as the 10-year note yield, right? And you can see that we had this rebid zone down here at 80.56. We never quite touched down there, but even so, last week I was saying, it's still a good time to accumulate energy stocks, that they're likely to outperform crude. I'm still of that same mind. And I still think that as long as crude can remain in this trend channel, that it's headed back up to 86.38, and that's going to be a key level. But we do have some levels to watch here. I would get much more bullish of crude above 83.71, because at that point, I think it's pretty likely to make a quick trip up to 85.32. So overall, still constructive on crude, but rather own energy stocks on a swing basis. Then we have gold, and gold broke its uptrend line, which tells me that we could be in for some choppy sailing. We have some support here at 23.1820. If we break that level, I think we could get all the way down to 21.90. And that's going to be an area where I'd be very, very tempted to rebid this thing, because it could get some support at the top of the cloud, as well as this previous area that we see on the chart where price like to consolidate. That tends to be an area where buyers may come back in, sort of rebid this thing. So I'm looking at gold curiously. I'm not as tempted to fade it unless we break below 23.1820. If we do, I think we could get a quick $100 downside trade and then maybe rebid this thing and continue that upside. Granted, this thing has gotten a little bit out of balance. It's gotten it's risen very quickly in a short period of time without taking too much of a breather. So I would like to see a correction in gold overall. I think it would be healthy, but I also need to see that 21.90 level hold to feel confident that the buyers have still maintained control. Next one that actually looks a little better is gold's cousin, silver. I moved my trend line down a little bit. It is a crayon line, and I always like to joke that technical analysis is astrology for gamblers. So there is that. But the reason I did it is because we still have those 3 touches here. So as long as we're still holding this trend line, I'm going to feel comfortable potentially rebidding silver here. As long as we're holding this trend line, it gives me very clearly defined risk and reward. But below it, I'm going to be wanting to fade silver down to 25.23. It's really that simple. At that point, I think we get rebid somewhere between there and 24.39. But that's going to be kind of how I look at silver. I'm still more constructive on it because gold's outperformed by so much that I really think that silver has room to run here. Remember, gold in 2011 was trading over $1,900 an ounce. Silver is trading at like $48 an ounce. Silver never caught up despite industrial demand and investing demand coming back. And I think that it still has room to run, but it may take a longer time. We might have some digesting to do if we break below that trend line. And then we have copper. Dr. Copper is sort of got a little bit overextended. I talked about this on this weekend's Navigating the Markets for Traderade subscribers, that I would be inclined to want to take the core positions off in copper miners and any kind of copper futures trades. I was more long the copper miners, but I know folks sometimes prefer to trade the futures as well. And the reason is this is a pretty well-defined upward trending channel. And as we broke to the upside, positioning is getting a little bit extended. Technicals were getting a little bit extended. So I just felt like it was a great place to take some profits on what's been an excellent trade. And I'd love to rebid the miners if we sort of consolidate back towards this lower channel here. But before then, we've got resistance overhead at this 467 50 level, and then we've got potential support below us at $4.45. So let's watch how copper trades here, but I'd suspect that this thing could fade a bit lower this week. And then we've got the 10-year note. which I just put the lines on here for posterity. I kept the ones that I had on over the last several sessions. And the reason for that is it's kind of just going with the trend that I figured it might, which is this idea of, all right, we'll kind of get down here to this area where there's really no interest. We'll kind of look below, maybe not get there quite yet. You got some rebidding happening. We've gotten back up close to this area of resistance where I suspect with all this supply, we'll see a sell back down. And I'm thinking on that next sell down, again, depending on kind of what we hear from the Fed and some of the economic data this week, that rates could rise, that, the 10-year is going to probably push to new highs for the year, and that 105.13 target on 10-year note futures would be a reasonable place to fade this thing to. And so we're just about to dive into Bookmap, but one other thing I wanted to talk about real quick was that stimulus in China, if it does happen, could be a tailwind to move CPI higher. This isn't something that gets discussed too much, but China can export disinflation or deflation. It can also export inflation, and strong enough stimulus there could lead to more of the latter. So just before we get into Bookmap, if you want to learn a little bit more about what I do, you can follow my posts on Twitter, my videos on YouTube, both with the same handle at Mayhem 4 Markets. That's Mayhem number 4 Markets. My trading ideas, coaching, and unique market tools can be found at Traderade.com. You can also get up to 40% off of Bookmap at Traderade.com/Bookmap. And the advanced SPX options visualizer that I built for Bookmap is now available. Visit Traderade.com/SPX to learn more. My long-term trading and investment ideas, research and consulting services are available at macrovisor.com. And I live stream regularly, including for Bookmap, every Tuesday at 9 a.m. Eastern, and more often on our Traderade Discord for members. So be sure to join me here regularly. And if you're interested in checking out Traderade, you can get 20% off on me by using the code Mayhem20 at checkout. So with that all being said, let's go ahead and kind of go back to the futures, as the name of this broadcast is, right? So here we are. We've got S&P 500 on screen. And, we're just sort of chopping around this 5,100 level, as we discussed. I think it's going to be important to watch this one throughout the trading day. We've got a number of different catalysts, both today and throughout the week, that can really move the market around. So I think having a good deal of discretion, and sorry about that, my trading view window popped right up on screen, is going to be important. Being somewhat more careful about trade placement, about execution, and size, I think is really important in this environment. And, again, now we're trading at 51.3250. So that's well below my pivot of 51.4550. And we can also see that the, heat map is relatively liquid. We've got about 50,000 contracts on order book depth. So it's decent in that respect. That is to say that liquidity has come back to the market. It was not this liquid, a couple of weeks ago when we talked, and really last week until the end of the week, it wasn't that liquid either. So I think that's another thing to kind of keep in mind, is just the way that this market is continuing to evolve here. We are seeing liquidity come back. We are seeing some of the conditions for better intraday trading in that sense. You get better fills and less slippage, but we still are in negative gamma territory, and we still are in the buyback blackout window, and we still are in the cloud. So, we got 1 out of 4 kind of working in our favor for better liquidity overall. Let's look at the NASDAQ real quick here. NASDAQ taking a bit of a tumble here in the early market trading, not really seeing the same amount of pressure in the S&P yet. So that's kind of interesting. We'll take note of that. Let's also bring the Russell on screen here. Russell doing the opposite that the NASDAQ's doing, and actually starting to get a decent bid, which has me wondering what's happening in the 10 years, and really nothing so far. If anything, rates are pretty stable this morning. Then we'll look at crude oil. Crude oil coming back up off its lows, kind of being rebid at that point of control that was pulled lower by sellers. And it looks like, that VWAP level around, let's call it 82.49, is probably going to be the next level of resistance to watch. And this point of control certainly assuming the role of support here. Gold getting a bit of a rebid here, but again, the technicals look kind of precarious on this one. So for me, I'd be more interested in fading it overall. But I do want to see how we handle this next level of potential support. So let's see how we trade there. And then I'm just going to reorganize some of these in terms of their order. Copper Copper is starting to come back a little bit, but again, this is one I need to rotate the contract for. I'm aware of that. I'll do that shortly, but this is one I would be a little bit cautious of, and I'll get that contract taken care of in just a moment. Let me get silver up here next to gold, just have all the metals together here. This is another one I need to rotate the contract on, so I will do that as well as we're going throughout this session. And I'm just going to pull off the 5-year note futures because that was specific to an auction, but let's check in on the euro. Euro also pretty flat here. Dollar has a bit of a bid. It's really the yen that's showing weakness again after that ephemeral pop we had that may have had to do with interventive pressure. But we know just about every currency intervention is short-lived and they're best, kind of faded. Based on what I've seen throughout time studying these, it's very rare that a currency intervention lasts. So, the Bank of Japan, the Ministry of Finance there, the burden of proof is kind of on them. And that has everything to do with the fact that the Bank of Japan's kind of painted themselves in a corner. There's not really a lot they can do to defend the currency, right? They basically said, well, even with everything that we're seeing, inflation isn't really at the level that we want to see. But even more important than that, we're going to just keep stimulating. We're going to keep buying Japanese government debt issuance and so on and so forth. And that also kind of gives me this feel of, okay, so they're probably of the mind that they're not going to do anything more on the tightening side, or if they do, it won't be that meaningful. So that's another thing that I have my eyes on just overall, that the yen is likely to continue to weaken, and that we could start to see some volatility as a result of that should it continue, especially around, getting past 170 USD JPY. So folks, while we're streaming here, if you have any questions about what I'm showing on screen or what I've already discussed, please feel free to post your questions in the chat rooms. More than happy to help. If you're on the Bookmap Discord, please be sure to tag me in so I see it. And I'm just going to check around and see if anyone's asked anything. Hey, can you analyze crypto? Yeah, that's something I plan to add to these streams in the future. I'm not all set up for it today, but certainly there's been some questions about adding, things like Bitcoin on here. So that is something I do plan to do. We are seeing a bit of a bid coming in here. We're just above what is ultimately going to be now considered the volatility trigger level on S&P because of the amount of positioning at 5,100. So, a big move below that 5,100 level could unleash some volatility. But right now we're just about 7 points above 5,100 on SPX, and we can see some liquidity building above us and actually fading below us. So that tends to be constructive for price. You can also see the gamma flip level just above here from the advanced SPX options visualizer. Sorry about the radio silence there, folks. Just looking around and gathering information as we go throughout the trading day here. And just checking in on some of the news and otherwise. Let's see what kind of unusual flows we have in the options market. Lots of attention on Tesla and NVIDIA, as I'm sure people wouldn't be too surprised to hear. Tesla 190s just got swept with about 465,000 in premium for May 3rd. MicroStrategy 1,200 call strike for May 3rd, swept with 852,000 in premium. Google 167.50s with 106,000 in premium, swept for May 3rd as well. So we are seeing some of that coming back in. Calls, unusually sized call sweeps are outpacing that of puts as well by about 3 to 1. possibly about 3.5 to 1. So that also kind of gives us an impression that there's a lot of bullishness. You know, when people are willing to put that much size into options, it's kind of giving you a sense that there's a reasonable amount of optimism. And, you know, I guess that reconciles with what we're seeing overall in positioning and some of the measures of sentiment and what we're seeing overall in flows, that there is a lot of optimism in this market. Folks continue to feel good, and some of the wrenches that get thrown in the works don't necessarily discourage folks from continuing to accumulate risk. So it does make sense to see a bit of a continuation of that. We see NVIDIA 900s being swept, 109,000 in premium for the May 3rd calls. And we see liquidity still building overhead and fading a bit below us, but we do see a new bid coming in below around 5130, just around that, you know, vol trigger, just below that 5100 SPX level. And we can zoom out and kind of see the distribution of options positioning right now. Based on my advanced SPX options visualizer, we can kind of get a sense as to where we may see some bigger levels of interaction with this market. That wall of calls up over us, which corresponds to about 5,200 SPX, is likely to be a pretty significant level of resistance. We can also see now the newest options activity from today going over CBOE, now populating on the two most active calls and the two most active puts. So the hot call is the most active call. The warm call is the second most active. The hot put's the most active put, right around where price is currently trading. And the warm put is the second most active. And we'll keep an eye on those levels throughout the trading day. And we are seeing interest in that hot call continuing to build up now. It is the most active option on the SPX options chain. Over 1,000 contracts transacting there. And that asterisk is also telling you that call activity is exceeding that of put activity. So if we look at the put call ratio for SPX here, we're seeing that right now, wow, it's about 0.64. So that means that calls are exceeding puts by about 36%. So that sort of reconciles with what we're seeing in the optimism on the single stock and ETF side with unusual sweeps as well. And we'll see how that goes. We do see more interest building above here, that 5150 level, also seeing a large resting offer building up there as well. And we, see some of the liquidity below diminishing. So typically that's constructive unless it becomes sort of an overwhelming amount of liquidity above us. We also see that hot call now building up to 2,000 contracts. So, there's a pretty big contrast here between what we're seeing on the put side and the call side. I'm just going to zoom out. And I think that, it's basically about a 30% excess of calls versus puts so far. But we'll see how this plays out. It's still early in the trading day. We're just about to kind of get our 20-minute opening range here. So the bottom of that opening range looks like it's going to be about 51.27.25. And the top of that range looks like it's going to be about 51.41.25. So for me, piercing either side of that opening range will give me a little bit greater conviction that we're starting to form a trend day. We don't have a very big opening range though here. It's just in excess of like 10 points or 10 handles on the S&P. It's like 13 handles. So that also implies it may not be a very big move. If we do break out of the opening range, that extension could be somewhat small. So it may not be the most exciting trading day based on that analysis, based on probabilities and distributions of outcomes due to the opening range being smaller. So we are seeing a bit of a pullback here so far. We've got data that's coming out in 10 minutes. That'll be CB consumer confidence. The expectation is a reading of 104. The prior reading was 104.7. We also have Dallas Fed services coming out at 10:30. And that's probably not going to be a big market mover, but today is kind of a light macro data day compared to what we're going to be seeing later on this week. Wednesday, we have ISM manufacturing PMI and JOLTS job openings. And then, of course, we have the Fed interest rate decision. But, tomorrow night we'll also have Amazon earnings, and Thursday we'll have Apple. And then on Friday, we'll have non-farm payrolls and unemployment. So it's going to be a pretty interesting week. Earlier today, we also had employment costs, and they came in higher than expected. Forecast for 0.7%. Actual was 1.1%. And that tends to be one of the drivers of cost push inflation. That is to say, if wages are annualizing at a growth rate of 4.4% a year, that's still higher than what the Fed wants to see. And that typically means companies either have to eat lower margins or they have to potentially contend with, raising prices on consumers. And folks, if you're watching on Twitter, give me 1 second. I'm going to restart the stream there. I'm just going to try a little experiment. So it'll be just like a brief pause and then it'll get right back as we see how this whole thing resolves. And of course, we will be closing up the Bookmap stream in about 8 minutes. So you can stay tuned on my YouTube, on my Twitter, and my Twitch as Bookmap's programming schedule changes at 10 a.m. And folks, as always, if you have any questions for me, I welcome them. I do love teaching. I'm also always a student of the markets. I think it behooves us to all always be students of the market. And as always, I appreciate you all tuning in. I always hope that what I'm streaming is helpful to you to learn, to grow, and to really look at the markets with a little bit of a different approach. And I also really want people to be safe. I believe that one of the keys to trading is capital preservation. And a lot of folks get killed not preserving capital. Remember, trading is a business. And we've got to be able to be there liquid and able to trade the next day, which means not putting on too much risk, not taking too big of losses, which means not taking on too much size, right? And the microstructure that we're seeing in the S&P is a little bit disconcerting. Just if you're looking for a bullish outcome here, so far this is looking like lower highs and lower lows. Not a lot of conviction though from the sellers here. So, it's still anyone's game right now. We still haven't really shown any decisiveness in this opening range breaking up or down. And I'd need to see that to want to get qualify taking on risk right here. I just don't see it quite yet, right? I think the path of least resistance may be lower, but I would also say that 5100 SPX is such an important level that there is a fair possibility we just sort of chop sideways up and down below and above that level for quite some time before that resolves. And folks, if you're curious about what's going on in India and why we continue to remain bullish on it, check out a tweet I just shared on my feed on Twitter from my partner Aisha about why we continue to remain bullish on India's economic outlook, and also their stocks. So it's a really great little write up. You can check it out right there on my Twitter feed. But so far, market's just sort of grinding sideways. Let's check in on the NASDAQ here as well. NASDAQ has a pretty large resting bid here at 17,840 and a pretty large resting offer at 17,882.50. This bid around 17,840 is just above the point of control, and you can see that large positive delta print around that level as well. So we kind of get a sense that the NASDAQ has a bit of a defined range. It needs to break one way or the other to really give us a better sense of its momentum. And remember, I do have that pivot level on the NASDAQ. For the S&P, to remind you, that pivot was 5145.50, so we're about 9 handles below it. On the NASDAQ, that pivot level is 17,910, so we're just about 37 points below that. Let's check in on the Russell here as we see a bid coming into the NASDAQ. A little bit of a rebid on the Russell just above VWAP where it found support, now coming up to 2011.30. And crude selling down a bit after showing some strength earlier. It looks like after the market opened, that selling pressure resumed. We saw this little bit of a bid, in the beginning of the trading day, but now we're seeing crude fade lower. And it makes sense. Again, I would not mind rebidding this thing around $80.55. I think that's an area where I start to get much more interested, or 80.56. Anywhere around there, I get much more interested because that seems to have been the rebid zone over the last month and a half or so. But if we break below there, I just want to see the trend line hold, and that would be the second place that I would rebid. Other than that, though, I remain constructive on energy stocks, and I am an accumulator for swing positions on dips in crude. Still an area I'm interested in. Gold starting to show just a little bit more distributive pressure after that rebound, but overall, the technicals on gold remain pretty precarious here. Let's just go back to crude so you can see it on my chart. You can see we're starting to cut below this next level of support that was 81.50. So that does make it more likely we kind of get back into this rebid zone, and we just have to be patient and wait for an opportunity if we're trying to trade the futures. But if we're not, and we're content to trade the energy stocks, again, for longer term swings and investments, I like being an accumulator here. So as we get close to the end of the stream for Bookmap, I want to thank everyone for tuning in. Really appreciate it. Always a lot of fun. It's a great community. If you haven't checked out Bookmap, I recommend checking it out. You can get up to 40% off by going to traderade.com/bookmap and scrolling down to the specials. So it's a really, really great product with a really great team behind it. And I've also built the advanced SPX options visualizer, which will allow you to look at the data that we can see here on this right column about how options may be affecting price discovery in the broader market. So this has been me, Markets and Mayhem, for our weekly Back to the Future stream on Bookmap. I'm going to be hopping off the Bookmap Discord and YouTube, and I'm going to keep streaming on Twitter and my YouTube and Twitch, and I'm going to move over to the Traderade Discord as well. So thank you everyone for tuning in. Catch me next week at 9 a.m. and be sure to check out what the Bookmap folks are doing next on their YouTube as well. We just got consumer confidence in. Numbers came in a lot lower than expected. Holy moly, 97. So I'm going to dig into those consumer sentiment numbers here because that was quite a miss versus expectations, to put it mildly. The market received it well at first, but we need to know why consumers are this concerned. So I'm just going to go into the Consumer Conference Board website. And the website says the requested service is temporarily unavailable. It is either overloaded or under maintenance. So and now we're starting to see a retreat here in the S&P 500. Again, this was a huge miss. It was supposed to be 104 according to forecasts. The prior was 104.7. That's now been revised lower to 103.1. And the consumer confidence website is so overloaded that I'm not able to download the report yet. So that's probably nothing. Okay, it looks like their website's starting to come back up here. Very slow. So it looks like a lot of folks are visiting it like right now. So from Dana M. Peterson, chief economist at the Conference Board, confidence retreated further in April, reaching its lowest level since July 2022, as consumers became less positive about the current labor market situation and more concerned about future business conditions, job availability, and income. So the confidence story is changing here, as we kind of look through this report. This is a pretty significant change. This also kind of gets to another theme, which was, we are seeing savings rates dropping. We're seeing savings become more exhausted for the bottom two quartiles of consumers. The top quartile are still doing relatively well. They're still earning net interest income. They still have their investments that are pretty buoyant. But the bottom 50% are, well, they're starting to feel the pain a little bit. Record interest on credit card payments being paid, and then record levels of debt on credit cards, reflecting that a lot of people are using these revolving credit vehicles that are extremely expensive to be able to make ends meet in an environment where inflation still remains somewhat unforgiving, particularly on the cumulative side. Now, will this report affect the market imminently? Probably not too much. I still think the biggest thing that we have to resolve today is the 5,100 level on SPX cash. We're just sort of chopping above and below it right now. We also got a pretty nasty miss in Chicago PMI earlier, 37.9 versus 41.4. Deep, deep in contraction there. So that's another bit of a concern in the data. Now, this is bigger picture themes that can actually be helpful in the short term. You can see the 10-year note futures are being bid here. So rates are coming down a little bit because this economic data is softer than what was expected, and that can help equities get a bid. And you can see a fair amount of conviction being expressed here by buyers. So I wouldn't necessarily say that these worse than expected prints mean we're going to have a bearish outcome, but I do think that they at least add concern to the longer term view as to how does this impact earnings over the next several quarters, and what does that do to the longer term view of the market. We are seeing that selling pressure in crude accelerate just a little bit here as well, taking us down to this 81 level where there's a large resting bid, and we can see that bids are continuing to build. Got that 80-50 level well bid as well. That's going to be the key level for me in terms of thinking I might want to rebid down there just above that around 80-56 or so. I'm also still continuing to accumulate energy names in this environment on weakness in oil. I don't mind nibbling on some of the names that I like for longer term swing trades, like looking at Exxon, looking at Chevron, looking at Liberty, looking at Patterson Energy, looking at Vital. You know, these are all still names I'm bullish on, as well as Schlumberger and Halliburton, because I don't think that the overall move in energy is quite over yet. We've got gold taking a pretty big hit here. I warned about this one earlier, saying that we could continue to see some pressure after cracking that trend line lower. Let's take a look at the chart here live for everyone. So you can see on screen, we cracked the trend line. Now we're cracking this next sort of like last resort support level. I hate to say it for the gold bulls here, but this is kind of like the last stand. If you really want to look at this level that we're at right now, this is it, right? Beyond here, I do think we do get a more significant move lower. Maybe we get a little bit of a reflexive bid around 2309, but this is starting to look pretty precarious to me overall. This is a very low volume node area, and so it's likely that at the very least we'll get a decision by the market that'll tell us, does it want to rebid this thing? Is it going to be a head fake look below and then rebid, or are we going to get all the way back down to 2190? I think the further we push down through these potential zones of accumulation, the more likely it is we get that correction or at least sell down in gold, right? And we're seeing that accelerate as we break the uptrend line that's been there since March. So that's what has me concerned. I'm actually, overall looking at silver a little more constructively. It has a trend line that it's still trying to defend here. So it hasn't seen the same kind of technical breakdown that gold has. And then we have copper, one of the other metals that we like to keep an eye on. As I talked about in navigating the markets this weekend, we broke above. And then we had that was a look above fail, because now we're back in the channel. And that makes it more likely to me that I think we see copper kind of play around here with this next level of support. And maybe we get like a bit of a rebid off of that. But I think ultimately we may get a reset down to the lower end of the channel, which would be a great opportunity to accumulate copper and copper miners. So I talked about in navigating the markets, kind of taking some positionings off this week in copper miners, and that would have been something that folks would have been executing yesterday when we had this big spike up. Well, that worked out pretty well, and now we're just trying to see if we get an opportunity to reaccumulate those core positions in copper miners, right? So we've got CopX, we've got XME, which gives you some exposure. You've also got things like Freeport McMoran and SCCO, Southern Copper. These would be positions that I'd be looking at rebidding depending on where copper ultimately finds its support, which I think will likely be the lower trend line. We can see that it has this sort of habit of revisiting this area when it gets into a sort of corrective pause, right? So I wouldn't be too surprised if we see that opportunity again. And if we do, that's kind of where I would look at wanting to rebid copper. So let's go back to the S&P 500 here, just sort of chopping along 5100. This has been the theme, this huge level of options positioning, the largest level of net call positioning on the chain, and that's really causing some stickiness. We kind of get stuck around that level, maybe 10 points above or below. We're still kind of stuck to the level. And I think that's an important qualification too, just the way the options market is influencing price, particularly when there's not a lot of conviction by either side. Right? If you're a buyer or a seller of this market and you're coming in today, you've got so much ahead of you this week. You've got Amazon, you've got the Fed, you've got Apple, you've got the rest of QRA, you've got, all the labor market data. You may not necessarily want to show too much conviction. So I think that's one of the things that amplifies the probability of this chop. And then we're also, as I was talking about earlier, we're in the cloud, right? We're in the Ichimoku cloud, and it's a volume-weighted cloud, so that matters. Let's put that back on screen for a moment. Feel free to take note of these levels in S&P. I discussed earlier my pivot level for ES today is 51.4550. If we do push above that, I'll be more constructive and willing to consider taking longs. But we're still just plugging away at this key level, right? We're just basically, what, 8 handles above 5100? So I still want to see a further push higher to get bullish of this market. Otherwise, I do think if we start to push below 5,100, more than 10 points below and build acceptance, we could see a trip down to 5,106. That would be the bottom side of the trading range that I'd be looking for today overall. So, with the opening range as small as it is, maybe that doesn't play out today at all. Maybe we just sort of chop sideways for a while because it is implying that it's not going to be a very volatile day. But overall, these are the key levels I'm watching. You're welcome to take a screenshot of this in case it helps you as well. Let's also take a look at the NASDAQ. It's a similar view. Just like the ES contract, it is trapped in the cloud, and it is just below this pivot level that I have marked off. And we're still, about 39 handles away from that pivot level. So still no real conviction here. We're still in the cloud. That means no one really has control. To the credit of buyers, they were able to take us back into the cloud. So sellers have lost control of this, but now no one has control. And so as I was discussing earlier, when you're in the volume weighted Ichimoku cloud, which you can get this on TradingView, you can go on TradingView. It's a free indicator you can add to your charts. And I just pared it down so it's just the cloud because I like to overlay volume profile and my own price action lines, and I don't want it to be too busy. I like to just take a quick glance at the chart and really get a flavor for what I'm looking at. So that's why I redact some of that other information. But this, to me, at least at a glance, I can see, okay, NASDAQ is trapped in the cloud. It's trendless, so it's likely to be a bit more volatile on an intraday basis. And then S&P is in negative gamma territory, which affects the NASDAQ in a similar way. It just implies you could see higher levels of realized vol, a more choppy trading environment, less conviction from either side. The Russell is another interesting one. I know it's the index that many love to hate. The pivot I have on this one is 2026.70. We're still well below that, and we're still below some key support. And then let's bring on crude on screen one more time here. So again, 80.56 is the level I'm interested in on this one. I'm not really interested in bidding here. I will accumulate, longer term energy stocks into this weakness. But if I want to bid crude itself, I'm going to look at 80.56 as my first area. And if I don't get a rebid from there, I'm going to look at that bottom trend line. Let's take a look at the distribution of options, positioning, liquidity, and everything else we have going on in S&P. We do see large resting liquidity above us around 5150 and 5163. We can also see that we're seeing just a little bit of a change overall in terms of the distribution of options opinions being expressed. I'm just going to take a quick look at one other chart that I maintain on the Discord that Traderade members have access to. That is SPX0. Or you can just type in !SPX0. It shows you the intraday gamma and volume levels. And I'm most interested in volume. And wouldn't you know it, most of the folks out there are interested in 5100. So we have some overlap between the hot put and the hot call today. I just posted a chart on Twitter of that 5100 level, just what we're seeing in volume. I'll just share another one about the overall gamma exposure as well. And I just posted that full gamma chart as well. So, it's just an interesting environment here. It's one that unfortunately is probably going to be somewhat boring until we have some larger catalysts that kind of push us out of this magnetic level. Just checking around for the latest news and what all is going on here. We do see that the distribution of unusual sweeps is evening out between puts and calls and single stocks and ETFs. So less bullish conviction is what that means. More hedging flows. But there is still on the SPX side that put call ratio is still about 6% higher on calls than puts with 0.94. So for me, it's really going to be about a decisive break above or below 5100 SPX by over 10 points and building some acceptance there for continuation in either direction. So far, the market today has been a bit slow. And I think it has to digest that enormous amount of positioning, which is acting quite magnetic. You do see some pretty big sweeps coming through for Nvidia, HubSpot, Meta, Micron, the semiconductor ETF, Tesla, on the call side. But again, it's just kind of evening out with what we're seeing on the put side in other areas. So that earlier upside conviction that we saw that was encouraging in single stocks and ETFs is beginning to fade a bit here. And it's looking more and more like we're going to start to explore the other side of this range, maybe 5100 and below on SPX. And we do see some liquidity beginning to build below us as well as we approach that most active put contract from the advanced SPX options visualizer. And crude, so far it's actually defending this 81 level of resting bid pretty well. There's a pretty large bid on this contract. It only has an order book depth of 8.8 thousand. So I think it's worth paying attention to that level here. Perhaps we get a bit more of a rebid from there. If we push above that point of control, it could set up for some decent intraday longs. Gold also seeing a large resting bid down here around 2306, 2305. And S&P getting a pull lower here, some higher conviction from the sellers. You can see that in the size of these delta bubbles increasing, becoming more red. We'll just zoom in a little bit more on the microstructure here. And we're right back to 5100 SPX, that magnetic level. And we're seeing some continuing pressure below now. We do see arresting bids building below us here in S&P. So we're just going to zoom out a little bit to get an idea of that distribution of interest. But again, really need to see a move over 10 points above or below, or in ES 10 handles above or below, and building acceptance to feel like we're going to get any kind of larger trend type of move here. I don't think that news on Tesla is particularly encouraging at all. If you missed it, Tesla to lay off everyone working on superchargers and new vehicles, and is also working on getting rid of its public policy team, despite saying that robo-taxis would be here by August. That's not going to happen if they do that. And the news in China that caused this massive rebid is highly speculative. It's just basically a nod that maybe we'll let you use your self-driving cars, but there still hasn't been an official approval, and that technology still isn't being rolled out. Meanwhile, the company continues to cut prices and management continues to sort of flail about. I know there's a cult following, and if you're a fan of the company, I do apologize. It's not my intent to try to, diminish your hopes and dreams here, but quite frankly, I think that in the short term, this thing is a fade down to around 157.45. That's my 2 cents on Tesla, and this is why. Here's the chart. We had this head fake look above the cloud, right? We got to the top of this channel line, which is actually a pretty well-respected channel line, and we were rejected cleanly on that channel line. Now, we've seen this channel form and also been retested several times. Okay, so this is an area where the market actually assigned some value. And obviously we had this break above, right? We got briefly above the point of control, and then what immediately happened later? We pushed right back below in this downtrend. But it seems like this may be another one of those situations where we hit the top of the channel, get rejected lower, and potentially the stock continues its path of least resistance, which is a downtrend. I mean, if you zoom out on this thing, it's been in a downtrend for almost a year, right? It topped out in July of last year. I don't think that the worst is over for this one. I do think we had this impressive reflexive pop, but overall, it's still extremely generously valued given its deteriorating fundamentals. And while there are a lot of potentially promising initiatives on the horizon, none of them seem to be near term, whether it's self-driving or robo-taxis or robotics or AI or turning their cars into some kind of giant cloud competitor to AWS. Many of these seem far-fetched and probably won't be realized in the near term. So again, my goal is not to dissuade you. If you're long-term and you're bullish at Tesla and you love it, that's fine. If your investment thesis is still working for you after everything, more power to you. But my short-term and intermediate-term concern is this thing is still in a well-established downtrend. It just got rejected at a key level you could kind of talk about as a ceiling. And now we're back into the cloud. So I'm looking for this thing to move lower to about 157.45 to kind of continue the overall trend. Notice I'm not talking about going to the lower end of the channel. It could certainly go there, but I'm not going to be greedy on this one. I'm just going to look for price to kind of come back to a point where buyers have shown interest in the past and not necessarily into this lower volume level that's a less probable outcome. So that's a fade trade I'm going to build into. I don't take swing fades on a one and done basis. I tend to, on a stock like this, build in quarters or fifths. Otherwise, if you get too much conviction, you go in too soon, too hot, too heavy, you'll often get hurt, right? So even if I don't get to build the full position, that's okay. I don't mind taking a small, because I know this thing could just revert all the way back down to my price target pretty quickly, and maybe I don't get to build my full position, but I'm going to give myself some room for error. And I also know how excited people get about this stock and how much they can push it around. So we could even get another head fake look above type of scenario where we push above the trend channel and then move back low. So let's see what happens. I know some folks say never bet against Elon Musk. I think the longer term chart of Tesla over the last year or so says otherwise, that you can over long periods of time bet against him. But you've got to kind of be aware of which variables are moving the stock. And as we got into Tesla earnings, skew was blown out to the bearish side. So it was not a good time to fade the stock. It was actually a good time to look for a reflexive pop. But that earnings call, I listened to the whole thing. It was one of the most bizarre and silly calls I've ever experienced. And a lot of the things that were talked about were, quite frankly, imaginary and very unlikely to come to fruition. So folks, I'm going to hop off the live stream. Really appreciate all of y'all tuning in. Hopefully it was helpful to you in your trading. If you have any questions for me, let me know. And I'll be back later to cover earnings for Amazon and the close.